Coming up today, US loses the last AAA credit rating and we got a credit degrade. What does this mean for the stock market? We got some more trade deals coming out. That is what a lot of people are waiting for next week. We got some decent earnings, especially with companies like Home Depot and Lowe's. What does that mean for the stock market? And some key events to watch. With all that being said, the stock market isn't looking too bad. And we had a decent rally last week and still continuing. With that being said, with that credit rating, we did see stocks sell off a significant amount, breaking some key levels to the downside. So we really have to see how the stock market opens up, especially with news and everything like that connected. We just have to see what all is going on next week, Monday open, to really get a grasp on what's happening with the stock market. But we do have to talk about something big, which is the credit degrade, and to see how that can really affect stocks and companies and just overall what it affects. This is an action-packed video. You guys do not want to miss any of this. Let's get started. I just want to say I made this PDF. This is everything that I learned to become profitable with the stock market. I named it long term. I give you guys 40 free stocks and explain why you guys should invest into them long term. This is going to help you build your long term, help you with your day trades, swing trades, anything that you really need to know. It teaches you about charts, stocks, everything that you really need to know about the stock market. First link in the description below. With that being said, let's talk about them losing their AAA credit and honestly getting that downgrade from Moody's. This is a big deal, and honestly we've seen it with the stock market already, how big it really affected the markets already. A credit downgrade means rating agency like Moody's or S&P and anything like that has lowered the credit rating of a country, corporation, or financial institution. When this happens, a country, especially a major one like the US, it has significant effects on the stock market. Here's what a downgrade generally signals and what it might mean for the stock market overall. So what does it mean? So increased risk, a downgrade signals that the issuer is less likely to meet its debt obligation compared to before. So before, honestly, we were looking a little bit better with our debt, but with the debt ceiling keep on getting higher, keep on refinancing, it's just looking worse. And honestly, it is bad now, especially with the numbers that we're at right now. And it also makes higher borrowing costs. So governments or companies may face higher interest rates on future debt, which can slow down the growth overall. Because let's say for NVIDIA or something, they need to borrow some money to maybe finance some of their chip production or anything like that. It's going to cost more. And honestly, if you want to pay more, you don't really want to pay more. So if you look at the overall rate cuts that we have and why Trump really wants to get it cut down is because for the average consumer, it makes it cheaper for us to borrow money. So if you want to borrow, like, let's say something small like $100 and there's interest on it, you don't want to pay $5 when you can pay, maybe $2 or $3 on that borrowed $100 that you borrowed. Basically, it just makes it more easier to borrow money and cheaper overall. This can also bring loss of investors' confidence. It can spook markets, especially if the downgrade is unexpected or signals deep fiscal concerns. So let's talk about the stock market overall. So market volatility. Investors may panic or sell off riskier assets. So look at riskier assets getting sold off, maybe on Monday market open and maybe even Sunday before the market opens. Volatility often spikes as market digest the news. So this is very fast news, and we've seen with the stock market overall with that big sell that we've seen with the SPY and other stocks like NVIDIA and stuff like that. It already showed volatility basically. Decline in stock prices. So stock indexes like the S&P 500 or NASDAQ may drop, especially if the downgrade reflects broader economic weakness. Defense sectors, so utilities, healthcare may outperform during these periods. Look at staples and bonds going up, especially right now. So we do have rising bond yields. Downgrades usually lead to higher yields on government bonds, which can draw money away from stocks. Higher yields also make it more expensive for business to borrow, potentially slowing earnings growth. US dollar and global markets. So the US dollar might weaken like we've seen. Previously, honestly, I'm not even gonna lie, the US dollar has been kind of weakening, but we have been kind of bringing it back with these trade wars. But now with this downgrade, it can bring the dollar down even more, or in some cases, rise due to flight of safety. So people might go to the US dollar for safety, but keep that in mind too. Merger markets and global stocks may also decline if global sentiment turns risk off. So real example, so for the US credit downgrade by S&P in 2011, the S&P downgraded the US from to AAA to basically AA with a plus sign. The stock market dropped sharply in the short term, so you will see a short-term drop with the stock market. And over the next few weeks, volatility spiked, but markets eventually stabilized. So honestly, we might just see what we've seen with the trade war, just really fast moving markets, up, down, maybe even a kangaroo like we've been seeing. But what to watch is the downgrade due to rising debt, political dysfunction, or economic fundamentals. So honestly, right now, I think it's mainly for the rising debt that we have and just just us trying to raise the debt ceiling year by year. So keep that in mind. And you also want to look at how the bond markets are reacting. If yields rise sharply, it's a sign of serious concern. Do investors rotate into defensive assets or sell everything? So you want to keep this on mind, keep this on watch for Monday. If we're going to be seeing the S&P and tech sector sell off again, go into bonds, go into staples, stuff like that, you will want to pay attention to that. And you just want to see kind of like you just want to see if people are adjusting. You want to see if we're getting a rotation out of the tech sector, just like we seen a few weeks ago where, tech sector is selling off and then people are buying bonds and staples, stuff like that. So you really want to pay attention to that on Monday. So be very, very careful. But next, let's talk about the earnings. So we do have Home Depot and Lowe's. Keep those on your radar because we've seen recently with Walmart basically raising their prices with the tariffs. So honestly, if we see the same thing with Target, Home Depot, Lowe's, we might get some more news like that. So keep that on your mind and on your radar. See how the overall consumer is spending money. And basically, this is the earnings. There's not really anything major. Mainly just Home Depot, Target, and Lowe's is going to be the main things you want to pay attention to. Maybe BJ's, maybe even Wix. But honestly, man, this is the earnings calendar. The economic calendar on Monday, we got some speeches, not really anything major. Maybe the economic indicators might change a little bit, but that's 30 minutes after market opens. This is the rest. We went through it more in yesterday's video, so go check that out if you guys want to know more in depth with what is going on for next week. With that being said, we do have Trump tariff uncertainty still makes earnings estimates and guidance basically useless because honestly, all of the earnings stuff like that we're getting isn't really like accounting for the tariffs or anything like that. The only thing that we really get like related to tariffs is how it's going to really affect the companies, like we've seen recently with Walmart, showing that they're going to basically increase their prices. So we are getting a little bit of news with tariffs, but honestly, man, this might bring down the earnings and stuff like that for next earnings season just because of the tariffs are actually going to be accounted for. So really keep that on your mind and on your radar. Trade deals and focus. So basically, we are getting more trade deals. This week, we might see a little bit more. Maybe good news, maybe bad news. Europe is kind of showing that they want to make some deals. We've seen India kind of want 0% tariffs. So we are getting a little bit better news with tariffs overall. Hopefully, this can maybe bring the markets rallying even more. And or this credit degrade is just going to bring the markets back down. Maybe even make some new lows. You never know. But Trump to speak with Putin and Zelensky, basically trying to make this peace actually happen. We have been getting a lot of news trying to get this peace deal like basically secured, but honestly, man, just been going back and forth with this one. With that being said, we did this in the last video. We're gonna look at some stocks and see how they're watching. So honestly, man, I really want to see how the SPY reacts to this credit degrade. We already seen it sell off a decent amount. With that being said, do look at it to the downside. So 585, 580. Below that, look at 575 and 570. And then to the upside, if we do start rallying back, maybe get a good trade deal, maybe get some great news, maybe just honestly, man, this is just fake news, which probably isn't. But look at it above the 590, 595, and 600. But honestly, man, just please have your patience trading. And another thing is Bitcoin. Bitcoin might honestly become that safe stock, or not stock, but safe crypto coin, basically, that people are going to get to. So people might sell off their tech, buy into Bitcoin, because Bitcoin is pretty safe, but not really at this level because we seen it trading at like 78,000, a few weeks ago. So really have your patience with Bitcoin, but some stocks to trade depending on how Bitcoin moves. If we do see a lot of people buying Bitcoin, you can buy call options, and or if you see Bitcoin selling off with this bad news, you can buy put options. But MSTR, Coinbase, and IBIT are three great tickers to watch because they're pretty cheap. Or not pretty cheap, but you can make a lot of money with the option plays. But if we look at Bitcoin or IBIT, which is an ETF that moves with Bitcoin, it's pretty cheap. It's like $300 for a share or a contract. But if we go to like MSTR, it's like 3,500, and then Coinbase is like 2,500. So please have your patience with these ones. And honestly, man, if you really want to play crypto, play Bitcoin, you can just move with, Coinbase, MSTR, and IBIT. So keep these ones on your radar, especially if you want to trade based on how Bitcoin is moving and if you see it moving fast. Next stock to look at is NVIDIA. We are getting a lot of great deals with NVIDIA, but with people selling off the riskier assets, this might be one that sells off. So we are at a decent level with NVIDIA. We've seen it at these levels before, the 130 level. So we can bounce below this and go even lower. So honestly, to the downside, I will look at that 130 level. If we bounce below that 130, 125, 120, and then all the way down to that 115 to 110, we are getting great deals. But honestly, if people are going to sell out of their riskier assets, go into, staples and stuff like that, you're going to see NVIDIA sell off a decent amount. Another one is Apple. Apple has been moving pretty decent. This one was a big sell, a bigger sell than we've seen before. We're all the way down to that 208. So look at 205 and that 200 level to the downside for Apple. Just have your patience, like I said before, make a decent amount of money up or down. And honestly, man, we could probably get a big sell off with these tech stocks and then just see another rally back up. So you can honestly make money both ways. Just like I said, man, have your patience. Palantir is a decent one because honestly, even when we've seen, I mean, the riskier assets sell off, Palantir still held pretty strong. The 125 level is pretty high. I mean, honestly, I think if Palantir does have a big sell, we might get all the way down to like the $100 level, maybe even the $80 level. So this one can sell off a decent amount. We weren't really this high before. You broke all-time highs and kind of just been maintaining it the last couple of days. But with that being said, you can see Palantir sell off even more, maybe get to the $80 to $90 level if we keep on selling off and if this bad news just keeps on coming. Because honestly, man, I think the market that we're in, whatever news we get, we're going to keep on getting the same amount of news. So if we get bad news, we're going to keep on getting bad news. If we get good news, we're going to keep on getting good news. The market's going to pump, dump, pump, dump. So honestly, man, just have your patience with trading today. And let me know what tickers you guys are watching. Let me know what you guys are planning on trading. And let me know if you guys think this will bring the stock market down or we're just going to make a little bit of a rebound back up. Thanks for watching the video. Smash the like button, subscribe if you guys are new. Make sure to check out the daily videos that we make. We try to update you guys with the stock market, how to trade, how to invest, stuff like that, man. And I try to give you guys everything that you guys need to know for the week, for the day, and honestly, day trades, swing trades, anything like that. Trying to give you guys some plays. But right now, it's just a wait and see. We got to wait and see how the market really reacts on Monday. Thanks for watching. Peace out.